This is the third statement of funds flow analysis. That is nothing but funds flow statement. If you want to prepare essay question in the funds flow analysis, you need to prepare three statements. Yes, one is changes in working capital, second one is funds from operation, and third one is the funds flow statement. So it is also called sources and applications. So it is look like account, but it is not account, it is a statement. That's why we are not writing debit credit, we are not writing to buy. So no need to write debit credit, no need to write to buy, because it is a statement. It is like a balance sheet, it must be tally. Sources are equals to applications. In the final accounts, assets are equals to liabilities. Yes, like that. In the funds flow statement, sources are equals to applications. First, what we should write? First, we need to write first and second statement answers in the sources and applications. Where we should write in the source or application? Let's see. In the first statement, what is our answer? Either net increase or decrease in working capital. If it is decrease in working capital, that will be source. See here, net decrease in working capital. If it is increase in working capital, that will be application. Okay, so if it is decrease in working capital, source, increase in working capital, application, right? And second statement, what is the second statement? Funds from operations or adjusted profit and loss account. In that you will get profit or loss on funds from operations. So if it is profit, where we should write? In the sources, profit on funds from operations. If it is loss, that will be application, loss on funds from operation. Okay, after writing both answers, you need to check the question, that is balance sheet. In that balance sheet, already we taken current assets and current liabilities in the first statement, that is changes in working capital, and remaining assets and liabilities you need to take over here. And remaining means from asset side, except current assets, remaining assets are fixed assets and investment. So fixed assets and investment we need to check compared to last year, this year, increase or decrease. So already you have in the question 2 years details. Yes, in the last year some amounts are there, and the current year also we have some amounts. So compared to last year, if it is increase, that will be purchase of asset. If it is decrease, that is sale of asset. If it is purchase of asset, that will comes under application side. If it is sale of asset, that will comes under sources side. Why we should write if it is sale, source, if it is purchase, application? Because at the time of purchase, our cash is going out, so that is outflow of fund, so that it will comes under application. Sale of assets comes under source, because at the time of sale you are receiving cash, so our fund is growing in our business, so that will be source. Okay, so likewise you need to analyze. And next, coming to liability side, from liability side, except current liabilities, remaining liabilities are capital and long term debts. If the capital increases compared to last year, that will be issue. If the capital decreases, that will be redemption. So if it is redemption, that will be application. If it is a issue, that will be source. So issue of capital will be source, redemption of capital will be application. So redemption is nothing but repayment. So our cash is going out, at that time you need to write application side. Okay, issue means we are receiving cash from the shareholders, so that will be sources side. Okay, payment of tax, payment of dividend given in the adjustment. That adjustment figure you need to write over here, because we are paying tax, we are paying dividend, so it is outflow of fund, so you need to write in the application side. If you have drawings in the adjustment, that is also comes under application side. Okay, already I have explained these points. non-current liabilities, except current liabilities, non-current liabilities we are taking here. If non-current liabilities are increasing means issue. So if it is increase of capital, that is issue of capital. Increase of debentures means issue of debentures, that will comes under source. If it is issue, that will comes under source. Non-current liabilities decrease. Decrease means redemption, that is nothing but repayment. It will comes under application side. And non-current assets increases means purchase. If it is increase, purchase, that will comes under application side. Non-current assets decreases means sale, that will comes under sources side. So when you will have to see these points, if there is no adjustments regarding the assets and liabilities, if there is no adjustment only, you need to check whether it is increase or decrease. Otherwise you need to check in the working notes. So if you have adjustment regarding the assets and liabilities, you need to do the working notes. In that working notes, you will get sale or purchase of fixed asset. According to that only you need to post. If there is no working notes, just check increase or decrease the asset. According to that you need to post. Okay. Liabilities point of view also same. If there is a adjustment regarding the liability, check the working notes. Otherwise it is increase or decrease, we need to check. Okay. If it is increase or decrease, follow these points. If there is a adjustment regarding the liabilities and assets, you need to check the working notes. Clear? Thank you.